Folks, the housing crash is accelerating. We've got some May numbers to talk about. We will do that in a minute. We've got some week-to-week data update from Altos Research and Mike Simonson. We're going to talk about retail sales. And yes, at the very end of this, I'm going to rant about doomers. I've been corresponding with a doomer channel on X or Twitter, and I'm annoyed. So I will close with that rant. But first, let's get into it. Housing market crash is accelerating. Now, folks, if you are a follower of this channel, you know that I have been calling for at least 18 months, if not 2 years, accurately, the housing crash. Now, unfortunately, the housing crash is not in price. The housing crash that we are experiencing and experienced in great detail in May is in transactions. I am only aware of one channel that got it right, and it was this channel. Let's talk about May. May housing sales, aka transactions, was the third worst month on record. Think about that. Third worst month. So again, only months that were worse in the last couple of decades was, of course, May 2020. If you don't remember May 2020, it was essentially illegal to show housing. So not surprised that May 2020 was worse, and worse by a mile, in fairness. It was also October 23rd. Do you guys remember what happened in October 23rd? That's when rates spiked to 8%. Other than those 2 months, what we just went through in May is the worst housing crash in transactions. It's pretty wild. Why can that be? Well, we're seeing affordability catch up. We're seeing limited supply in first-time or entry-level homes. It is a story that is becoming longer and longer to tell. The question is, well, let's go through some May details just to show you how painful it was. So first and foremost, on a month-on-month basis, transactions fell 1.7%. It was just under 408,000. It was down almost 3% year on year. Active inventory fell 25% since 2019. 20% of properties bought in May had a price reduction. Days on market up to 32 days. Month supply 2.3 months. And of course, price. Well, unfortunately, folks, the crash bros, the doomers, were wrong again. While we did have the third worst month of transactions, price was up 5.1% to $439,000. Yes, price up, transactions down. We got it right again. They got it wrong. But hey, that's last month. Let's talk about last week. What is going on a week-on-week basis? Folks, if you're not following Altos Research, every week they put out a great data on Mondays. Mike Simonson, specifically Altos Research. We had 621K active listings. That is up 1.5% and up 38% year on year. Yep, inventory is building. 396 homes are pending. That is up 1% week on week, 2% year on year. And finally, price reductions. 36.4% of homes had a price reduction. Folks, that is above trend. That is growing. Trend or average over the last several decades, according to Mike, if memory serves, is around 33.5%. So we are statistically relevant above that. Again, if you go into the data, you will see a lot of these price reductions are Florida and Texas with very high concentration. So again, lots of stuff going on there. Let's talk about Wall Street buying homes. Folks, I'm sure you have heard that Wall Street has bought 40% of rental homes. Have you heard that? Yes, 40%. Well, it's not true. It was never true. But just to give you a sample, one of the markets that was often quoted was Las Vegas, Nevada. For the month of May, according to Parcel Labs, big companies who own 1,000 homes or more, they bought a whopping 300 homes. They sold 275 homes. So on net, they bought 25 homes. So yes, there is no doubt that Wall Street, the big boys, are involved in single family homes, but it is not 40% like the doomers continue to say. How about good old Fed President Patrick Harker. He is basically saying his base case is one rate cut if the economy goes as he expects. He thinks they need higher rates to squash shelter inflation. That's actually an interesting point of view, because if you actually hear a lot of the data out there, people are saying higher rates, restricting supply, will kind of have like a boomerang effect and actually inflate rent, owner's equivalent rent, in the months and quarters to be. So we are going to have to see. Again, much of the Fed presidents are saying we are doing our job on rates to cool inflation. Hey, home builders, do your job. Again, it is my hope, is my prayer that home builders get on it, build smaller homes, build significantly smaller homes, so we can get the first-time home buyer market resaturated, because we have not built first-time homes in a long, long time en masse. It's been the move-up and luxury market, the McMansions. Don't know if you saw this, but people are starting to talk about crash up more and more. Joseph Wang, you are getting more and more kudos out there. Congratulations to you for calling that and calling that early. Julian Emanuel, the CIO, Chief Investment Officer of Evercore ISI, he's talking S&P 500, 6,000. 6,000. Took his target up from 4,750 to 6,000. We also have Business Insider highlighting Main Street CIO James Demmert that the Dow is going to 100,000. Yes, folks, Dow 100K. Pretty crazy. We did get an EV maker going bankrupt. EV maker Fisker has filed for bankruptcy. They will be selling assets and looking to restructure debt. I do have a question, folks. What about Roaring Kitty? Roaring Kitty, obviously famous for GameStop. I think he parlayed his options into roughly 9 million shares. He is pot committed. I am curious. They just had their shareholder meeting, which was basically a non-event. There was no talk about how they're going to deploy their $3 billion. But you got to expect, look at Roaring Kitty's, what, 200 million bucks or thereabouts? Is Roaring Kitty like the best real estate investor ever? Or has he gotten lucky? I don't know. Leave your comments below. I'm generally curious what my audience thinks. Did Roaring Kitty get lucky? Like really, really lucky? Or is he a genius at using retail to move the market, which he has capitalized on? Just curious what you think. All right, folks, a couple of more things before I get into my doomer rant that has really bothered me. And when something bothers me, I have to talk about it. That's how I get it out of my system. So thank you for watching. Let's talk about the average net worth versus the median net worth. Folks, it appears that U.S. households' average net worth has just crossed $1 million. Now, you got to be very careful with your words here. I did say average. And why is this important? Folks, if you don't remember statistics, you have mean, median, and mode. There are 3 different ways you can look at information and figure out what is really going on in statistics. So the average net worth of a U.S. household is over $1 million. How could that be? Well, a couple of things. As I keep talking about on this channel and many of our experts, owning assets is a key to getting rich. Owning assets for a decade is key to getting rich. Inflation is a feature, not a bug. So if you own assets that are helped by inflation with 30-year fixed rate debt, you have superpower. Folks, you have a superpower. If you bought a rental home in 2021, 2, 3, have an interest rate below 4%, 30-year fixed, that is a superpower. Also, it is average. I actually asked folks on Twitter what the median net worth. Okay, average, you add up all the net worths, you divide by the households. Median is you line them all up and you find the middle. The reason you would go average to median is Bill Gates, Elon Musk, Zuckerberg, all of these, Warren Buffett, they're all pulling, the billionaires are pulling the average higher, right? The rich are getting richer. The top 10% are getting richer. Now, again, you can join the top 10%, buy assets, produce cash flow, hold for a decade. It's that simple. What is the median net worth? The median net worth is a paltry $192,900. So that's the median. I do not know the mode, right? The mode, if you don't know what the mode is from statistics, it is the number that is most common. And I fear that the mode of the US household might be zero. Right? Zero or negative. That is a fear, not a fact. It is a pure guess, pure speculation. But again, the average is $1 million. The median is 193, and the mode might be zero. There you go, folks. Your statistic walkthrough today. Folks, if you are in the One Rental at a Time school community, I have a treat for you. A lot of you are looking at self-management. Again, I can't help you there. But you know what? I've got friends. You've got Dion from Dion Talk, self-proclaimed the lazy landlord. You can go watch him on Think Media podcast today. Sean Cannell and Dion did a great interview. Loved it. Shout out Sean and Dion for that great conversation. Thank you so much. But yes, Dion tomorrow, 5 o'clock p.m. Pacific, 8 o'clock Eastern. You will get to ask questions, interact via a Zoom link that is already scheduled. On top of that, the one and only Matt, the Lumberjack Landlord, has come through, and he will do a session on Thursday, this week, Thursday, 6 p.m. Pacific, 9 o'clock Eastern. Folks, we're doing some stuff after work. A lot of you want to know about self-management. A lot of you want to know about being the lazy landlord. You want to know about the binder strategy. I am looking forward to blowing up the calendar inside the school community. We're going to get people lined up that you want to hear from. Join the school community now, right? Join the school community, get in the community, introduce yourself, tell us your buy box, tell us your stories, tell us who you want to hear from. We are going to be doing more and more stuff. So again, join. It's only $20 a month. It's ridiculously cheap for the amount of value you are getting. And then finally, we will get into retail sales and then my doomer rant. Retail sales was 0. Expectations were 0.3. So they were expecting a significant amount of growth. These are month-on-month numbers. Actual, drum roll please, 0.1. So again, retail sales, much like inflation, came in worse than expected. Well, I guess inflation came in better, lower. Came in lower than expected. How about core, aka X autos? Autos can swing retail sales quite a lot. Last was 0.2. Expected 0.2. Drum roll, please. Negative. Yes, folks, negative retail sales month on month of 0.1. At the end of the day, folks, I think, as I said during our Sunday talk, that retail sales is validating that the economy in Q2 is slowing down. I think it is obvious. The Fed is winning. Again, I don't think the Fed's going to move early. As I've said for quite a while now, I think they're winning on inflation. I think the job market is getting weaker. Thursday's an important day, folks. We're going to get the weekly unemployment claims. And do we have a trend? Again, last week we had a blip to 242. Does it go back down to 220 or does it stick higher? Thursday is important. We need a trend, not a blip. And then, of course, now we have the economy with retail sales. So again, stuff is going down. Okay, now for my doomer rant. So folks, I was interacting with a very large channel who I have tagged as a doomer, and I'm not naming them on purpose. because what I want to do is talk about the mentality. I want to talk about something I have finally figured out. So here we go. This is this gentleman's quote about his channel. My mission is to educate the public on what is happening and inspire individuals to build and protect their own wealth. That's what he said. Build wealth. That's his goal. My reply, given your videos, I would have never guessed you had any interest in helping people build wealth. I assumed your goal was to scare people day after day to do nothing. Glad I am wrong, but now I wonder, where is your wealth building videos? Folks, here's the deal. In my opinion, doomers, like this guy's channel, they take factual information. They take accurate information. They are 100% right about mass topics. It is my opinion that they do that because they know that's what the masses want. The masses want permission to do nothing. The masses want to know it's everybody else's fault and the system can't be beat. Folks, I don't accept that. I am on this channel. I have the millionaires on this channel because I want you the individual, to own your stuff. I want you to own your situation. I want you to know that you are the only person that could change it. Folks, ninth grade dropouts are supposed to have a hard life. Teenage moms are supposed to have a hard life if you look at statistics. Single parents, 3 kids making $17 an hour are supposed to have a hard life. Folks, you don't have to. Sacrifice is not a dirty word. If you are willing to sign up, own your situation, and make very, very small changes, and if you do that for a decade, you can have an amazing life. If you want to live like everybody else, follow doomers. If you want to be motivated to own your stuff and sacrifice for 5 to 10 years and live like very few, you could do that too, but it's your choice. If you want to listen to a doomer who is telling you their goal is to build wealth and he never produces building wealth content, guess who's getting rich? The guy who has figured out the algorithm and the fact that most people are lazy or stupid or both. I'm not that guy. I don't need the masses. I want to help 1%, 2% of folks out there recognize that they can take their situation and improve it. You could be a teenage mom with 2 kids, join the military and become a freaking millionaire. Shout out Sarah. You could be a high school dropout, not even high school, middle school dropout, and build a 7-figure business and retire early. Shout out the lumberjack. You could be a teenage mom, be forced into working in the healthcare, hate the healthcare industry, and become a millionaire. Shout out April Crosley. You could grow up in Section 8 housing, be housing insecure. You could sell your big home, move in with family, buy a 4-plex in house hack, and become a millionaire. Shout out Anna Kelly. How about a single parent responsible for 3 kids with $100,000 in debt, making $17 an hour? You can become a millionaire. Shout out Dion. Folks, getting wealthy is a choice. And part of that choice is who the hell do you follow? If you want to follow the big channels who preach doom and statistics and beg for you to stay stuck on their teat of doom, go for it. If you want to take personal responsibility and own your stuff, our entire community at One Rental at a Time is here for you, and we will continue to show up. So folks, I'm not going to give up the fight. I'm going to keep calling doomers out, partly because it's fun, partly because they sicken me. Doomers really sicken me. The fact that you can preach doom with accurate information, and think you're building wealth, you're only building wealth for yourself. You are the worst kind of person, in my opinion. You have figured out that you are a freaking news channel. Where it bleeds, it leads. You are nothing more than a second-rate news channel. You don't care about your audience getting rich or wealthy. You only care about yourself. All right, folks, rant over. Like, subscribe, comment. I hope you have an amazing day. Take care. Later.